Now, following the recent Memorandum of Understanding signed between the Federal Ministry of Finance Incorporated, that is MOFI, and the Niger State Government for the Sustainable Integrated Productive Communities Program, SIPC, the Governor of Niger State, Mohamed Umaru Bago, has presented the Certificate of Occupancy to the Federal Government for quick takeoff of the program. The Certificate of Occupancy covers 100,000 hectares of land, will support the pilot phase of building planned communities that mix farming, housing, and other economic activities.
This is a project that is going to bring revolution to Nigeria in terms of industrialization, agriculture, livestock, security, and so many other industries. This is a seal.
The true measure of success will not be the documents exchanged today, but the homes built, farms cultivated, jobs created, and communities transformed.
That's what Nigerians want to see, not drama, not adverts. They want to see food on the tables at price that makes sense. We have our fertilizer company who already has raw materials in the warehouses, and we can move fertilizer there as early as tomorrow if we need to.
The SIPC program is designed to help rural families secure land, good homes they can pay for with, farm produce, better roads, electricity, security, and ready markets for their crops. And now to Davos. For developing countries to escape the debt trap, Kristalina Georgieva of the International Monetary Fund says countries must increase their domestic revenue mobilization by widening the tax base with emphasis on bringing the informal sector into the formal fold. This is as the global economy is stuck in a low-growth challenge, with developing countries accumulating credit and now interest rates are rising amid the need to meet massive development spending needs, the political difficulty of raising taxes, and the urgent necessity of rebuilding buffers to protect against future shocks. Georgieva proposes a spending plan that will ensure long-term human capital isn't sacrificed for short-term balance.
Gradual fiscal consolidation, but you have to have a plan. You have to say, over this period of time, is it 2 years, is it 3 years, we are going to go down in our budget deficit, we would reduce our debt, we would bring our public finances in good place.
Now the markets across the three major African hubs of Nigeria, South Africa, and Namibia show a mix of a red day blues in the west, as well as record high celebrations in the south. This is as it was a rough day on the floor of the Nigerian exchange as the bears chased away the early week gains, with profit takers taking over and investors losing about 557 billion naira from their portfolios, even though more people were trading as the volume was up 3.4%. They were mostly selling to lock in cash. Big names like NEM, WAPCO, and NASCON led the retreat, while banking giants like Zenith Bank and Access Co also felt the heat. While Nigeria was cooling off, the Johannesburg Stock Exchange was in celebration mood as the market hit an all-time high of 121,705 today, with Sasol as the star of the show, jumping nearly 8%. After a stellar operation report, the Namibian stock market wasn't as volatile as Nigeria, but it shared some of the South Africa's optimism, with the market currently hovering around its 12-month high as the NSG overall index edged up 0.65% to settle at 2,231.71 basis points. That leaves investors feeling bullish about the long-term growth.